Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 9th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer as it says, everything I talk about is general commentary and does not constitute investment advice. I'm here to teach you some different strategies, but it's up to you to implement it in your portfolios in your own way. Because I don't know your risk parameters, I don't know what's in your portfolios, I can't give you a recommendation. Also, bottom line is, do your own homework. Past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Pretty much the only economic data we get this week. So let's make the most of it. Across the pond, not a whole lot going on. We did get French industrial production, came in at negative 0.4%, expected to be a positive 0.4%. Italian retail sales came in at negative 0.2%, expected to be a positive 0.1%. And then over here in the United States, we got PPI, Producer Price Index, month over month. It's not the ISM number, so it's not as widely looked at, especially by the Fed governors. It came in at 0.1%, expected to be 0.2%, and core PPI, Producer Price Index, which strips out some of the more volatile aspects of that number, came in line with expectations at 0.2%. Final wholesale inventories increased by 0.3%, which was less than the expected 0.6%. So, with all things not being equal, business inventories, really wholesale inventories, all those inventory numbers are a little bit vague, but lower than expected is better for overall margins. And finally, we got the crude oil inventories number came in at a drawdown of negative 2.2 million barrels, expected to be a drawdown of 0.2 million barrels. So much bigger than expected. We talk about this a lot. Are they just moving it from one bucket to the next? Well, this isn't necessarily the case right now, because what we saw was that crude oil inventory drawdown. Cushing did increase a little bit, but we saw gasoline and distillates really draw down more than expected. So all three of the big numbers that we're going to be looking at for economic indicators, if you will, crude oil inventories coming off, meaning that's being used, less supply, more demand, and that shows up in the gasoline as the demand because we would expect that number to rise. We didn't really see that. So distillates came off by 3.79 million barrels, expected to be a drawdown of 1.52 million barrels. So you can see bigger, 2 million barrels more than expected there, a little bit more. And gasoline was a drawdown of 2.17 million barrels, expected to be an increase of 75,000 barrels. So gasoline and crude oil was expected to increase, but we saw these massive drawdowns. Obviously, going to push crude oil higher. It is into the 70s. We just came shy of that 70 mark yesterday, but we did settle above this 50 Fibonacci level, which is very important. And today, off to the races with that good economic data. You can see we were down a little bit earlier, but after that data point, we just started moving higher. Gold futures are coming off just, I guess they're actually in positive territory, but lower than where they were off the open, but just slightly higher by about $1. Bonds coming off by about 0.5 point. Good economic data like this crude oil inventory number, that isn't really the thing that they're going to be looking at to determine rates. But what we can infer from these numbers is that there is demand, and that increased demand usually means that the economy is starting to pick up some momentum. So that being said, pricing in more of a rate hike would be in order for the bonds. VIX coming off a little bit today by about 50 some odd cents back into the 14s, out of the 15 handle. With the Dow Jones Industrial Average up only about 15 to 20 points on the day, for all intents and purposes, at any given moment. We are right here at the point of control for the most time spent at these levels. So it's a very comfortable area for any trader, whether they're long or short. Then on to the NASDAQ. It's in positive territory by about 7 points. We talked about this a couple of days ago when we got above this 23.6 Fibonacci level. That's acted as support, as you can see here. This is going to be a resistance area right in here that I don't have a line for on a Fibonacci or anything else, but you can see that has acted as resistance right here at the what is that? This 60, what is that? What is that number? I can't see. I need my glasses. 6850-ish area, let's call it. It seems like there's a little bit of line in the sand there. E-mini S&P is positive on the day, up by about 7 points. You know, not a whole lot to see here. It's pretty quiet, as you can see. After this week, really tight ranges compared to what we've been experiencing in the past. That's part of the reason why the VIX is starting to come off. Not a lot of volatility. But today, just another really quiet day. Overnight inventory got long, and we're flushing them out, right? Now that they've been flushed out, we're starting to see a little bit of momentum starting to pick up in the overall equities, and I think that they're going to finish positive on the day. I'm bullish in equities, as you can see, just by what I've been talking about. As soon as we got that confirmation a couple of days ago, I was saying that the risk is to the upside. All right, on to a few of my earnings trades that I did. I tweeted these out yesterday. Let's talk about in my IRA. I did this as a spread. May went in and sold the 114 puts, defined that risk by buying the 98 puts. It's really wide. That defined risk isn't like what I'm looking for to limit my risk. It's just to make it so it is appropriate in an IRA. A little trick of the trade there for you. Anyway, so I sold that entire spread, that put spread, for 75 cents. I bought back just the EA Sports 114 puts for 5 cents. I've left on those 98 puts. Over there in my margin account, I went in and sold the EA Sports. I sold the 114 puts in there for 83 cents. Bought those back for a nickel as well. Put those both orders in before the open. I actually did it. I have 3 accounts. 2 of them are trading accounts. So I basically did the same thing in both those margin accounts. So I bought back the EA Sports 114 puts for a nickel in both accounts because I put those in before the open. I did the same thing in Disney. Disney, though, you know, you can see after the earnings numbers blasted off to the upside, actually came out with good forward guidance. A lot of people staying on the premise of Disney, hotel deals and stuff like that. They're giving deals on hotels to get people stay on the Disney property. Well, that increased their overall margins because people are starting to buy different things like going to eat and stuff like that. If you're off, you might just go to the grocery store, right? So they're getting you to buy stuff on their dime in a sense. So in Disney, it did rally. I put it in for a nickel off the bat. But in Disney, let's talk about my IRA. Went in and sold the May, again, the weeklies that expire on Friday. Sold the 97 puts in there. Bought the 93 puts for defined risk. Did that for a total of 40 cents. Well, this morning I got in there and I put in both orders in my IRA and in my margin account. In my margin account, I sold those same 97 puts in Disney for 47 cents. So I did it as a spread in my IRA, margin account outright naked. Market opens up. I put those in for a nickel before the open. It was like basically a nickel bid at 8 cents. I moved my margin account up to 6 cents, unable. Go over to my IRA. I moved that bid from a nickel up to 6 cents, filled. So my order that I put in first was unable. My IRA, which I'm actually thankful about. I like getting the better fills in my IRA because of the tax implications and everything else, but I got that. I still am beside myself that I bid up in my margin account before my IRA gets filled. Margin account, that's when this market started coming off. Like I did that right off the bat and I started chasing it. Got it to bounce off this 200 SMA. I was thinking I was getting ready to pay 13 cents to get out. Market bounced a little bit. I got out for 11 cents in my margin account. So that was a lot of fun chasing that market. I can't believe it still. I even left in my 6 cents in my margin account for a little bit longer, and that's kind of why I saw the whole problem happening there. I thought there must have been a problem. There's no way that my first bid couldn't have gotten filled or could have got or was unable while my other order that was second got filled. It was a little annoying. All right, that's about it for today. Not a whole lot of earnings coming out today. I mean, there's a lot of earnings, but they're all basically biotech and drug companies and stuff like that. I don't really love to trade those, but we do have ROKU, which is ROKU. They don't have great they don't have great options markets in there. They're actually, you know, my rule is 10 cents wide. These guys are about 20 cents wide, but if, you know, push comes to shove, I might end up going with it. But as you can see, for a $30 stock, it's just 20 cents wide is a little wide for me. Tomorrow we got NVIDIA, but that's about it too. Then don't know if I'm going to be doing this earnings trade today. But all in all, tomorrow is our webinar. It's not Friday anymore, you guys. I moved it up so you guys can have your weekends. People were saying that they didn't want to do it on Fridays and wanted to kind of do it during the week so they can get their weekend started. So we've kind of moved this up due to popular demand to Thursday for you guys. Hope you guys enjoy that. And finally, give me a thumbs up or a thumbs down, like or dislike on this video. If you give me a dislike, though, let me know what I'm doing wrong. And give me a comment at the bottom, all right? Other than that, that's all I got for you. If you can't take that, take it easy.